Hi, this is Shah Khan, and in this video I'm going to tell you how to do accounting for a rent. We are going to start with simple scenario to complex scenarios. So first of all, this is a simple scenario. Suppose you have an annual rent of 12,000 and you have paid upfront the rent. So suppose we have started from the March 2024. So entry that you are going to make on the 1st of March would be prepaid rent debit with 12,000 and bank or cash account credit with 12,000. This prepaid rent is your asset and bank is also your asset. So one asset is increasing, other asset is decreasing. So now at the end of the March and every subsequent months you will make an entry as rent expense debit with 1000 and prepaid rent credit with 1000, because this 12,000 is rent for 12 months. So this is your monthly rent, and you will do the same entry for subsequent months as well. So now suppose your financial year ends at 31st of December 2024. So as far as presentation in the financial statement would concern, every month you will charge 1000, so 8000 will be charged as an expense in P&L. And as far as the prepaid rent account is concerned, initially prepaid rent account had the balance of 12,000 and now every month 1000 is being transferred or shifted to rent expense, or 1000 has been consumed into rent expense. So the remaining balance of prepaid rent would be 4000. So this is how it will be presented in financial statement. Let's consider the same scenario with VAT. So we have annual rent of 12,000, monthly rent is 1000 and VAT is 5%, which is 600. So total rent including VAT would be 12,600. Now at the time of making payment, you will make an entry as rent will still be debited with 12,000. You will debit prepaid rent. Again, this is your asset. So again, this will be debited. And as far as this 600 is concerned, this is your VAT refund, your asset. You can say it as your asset or your contra liability. If you are creating a VAT control account with the nature as liability, so this amount will reduce the liability. So that's why it is being debited, and bank or cash account will be credited with 12,600. All right. The same entries will be done each subsequent months. At the end of the financial year, suppose your financial year ends, and suppose this is your first financial year and this financial year ends on 31st of December 2024, it would have no difference except there will be VAT control account with negative balance of 600. We are assuming we don't have any output. Now let's consider the same scenario where post-dated checks are also involved. So if you have rent of 12,000 per year, VAT is 600, two PDCs will make entry on 1st of March as prepaid rent debit with 12,000, same entries. And as far as VAT control account or VAT input account or VAT refund account will be debit with 600, and PDC payable account will be credit with 12,600. So this is your liability account, this is your asset account, this is your asset or contra liability account. At the end of each month, you will make the same entries: rent expense debit and prepaid rent credit. At the time of payment, what will happen is that you have PDC payable of how much? 12,600. So suppose you have paid on 30th of June 2024, one check has been cashed. So your entry would be PDC payable debit and bank or cash account credit with 6,300. Now let's go and check your financial statements. As far as prepaid rent is concerned, it will be affected in the same way because 8 months of rent has been consumed from prepaid. So 12,000 minus 8,000 is 4,000. As far as VAT control account is concerned, you have negative balance of 600 with respect to VAT chart on the invoice, assuming that you already received the VAT invoice on 1st of March. And in liabilities, we will have PDC payable, which was 12,600 minus 6,300 already paid. So you will have balance of PDC payable with 6,300. And as far as P&L is concerned, rent expense would be 8,000 as usual. If we have to do apportionment or pro-rata basis of number of days when the contract was started. Same example, rent is 12,000, VAT is 600, and again we are paying in PDCs. So, but this time the contract or rent is starting from 9th of March 2024. So we are assuming that 9th of March has been included. So here what you will do is equal to 31 minus 8. So 23 days has been consumed. The rent of 23 days has been consumed in March. So at the end of the March, you will make one entry as total rent is 12,000 divided by 12, 1 month rent, and then you will divide it by 30. So you will get 1 day rent, multiply this with 23. So in this way you will get the rent of March, and prepaid rent will be consumed as with the same amount. This is based on number of days utilized. Similarly, in the end of the next month, full month will be charged as an expense. How it has affected our financial statements. On 31st of December 2024, you have prepaid rent. Your prepaid rent would be 12,000 minus 7,000 because for 7 months full month rent was charged. So 1,000 multiplied by 7 is equal to 7,000, plus in the month of March only 766 was charged. So 12,000 minus 7,000 minus 766, so amount would be 4,234 as far as prepaid rent is concerned. Again, VAT control account minus 600 unless you have balance, and if you have balance in VAT output, it will be adjusted with that. Now as far as one more thing here, PDC payable would be okay. As far as P&L is concerned, for 7 months 1,000 will be charged, and as far as for the month of March is concerned, 766 has been charged. So total rent expense charged during the period is 7,767. So that's it. I hope you like this video. Please click the subscribe button for me. Give me some motivating comments so I can release more videos of this kind. Thank you very much. Take care. Stay blessed.